The rules for Vancouver's presale market have changed forever. And if you're still thinking the old system is going to snap back, you're going to get blindsided. Because what just happened is not a normal slowdown. The old presale machine did not cool off. It crashed. The only reason most people are still calm is because the full damage is not obvious in the public stats yet. But the people inside the system already know what time it is. Developers know, lenders know, builders know, and anyone holding unsold inventory definitely knows. So the real question is not, is the market bad? The real question is, what replaces the old system now that it stopped working? That is what we're going to break down today. And heads up, if you are emotionally attached to the old Vancouver presale story, this is going to make you uncomfortable. That's good because discomfort is cheaper than denial. Let me give you some context. Last month in Toronto, only 87 new condos sold. 87. That was the slowest December for new condo sales in decades. And it was not just one bad month. 2025 was one of the worst years for new condo sales in modern history. Now, here is why you should care in Vancouver, because Vancouver is not immune, and in some ways Vancouver is actually worse. Developers are sitting on record levels of unsold inventory. Toronto has roughly 4,000 unsold new units. Vancouver has over 5,000 unsold new units. Pause and think about how insane that is. Toronto has more than double the population of Vancouver. More condos, more builders, it's a bigger city, yet Vancouver is sitting on more unsold new inventory. That is not just a Toronto problem migrating west, that is the pre-sale model failing in real time. And when the model fails, it does not fail gently. It fails by destroying the weakest assumptions first, then the stronger assumptions, then it finally breaks the entire psychology. That is what we're starting to see. If you only remember one line from this video, remember this. Vancouver did not run out of buyers. Vancouver ran out of buyers who were willing to pay fantasy pricing for investor product. That is what changed. Most people think pre-sales were just condos sold early. That is not what pre-sales really are. Pre-sales were a financing system. Here is the old system in plain language. Step 1, a developer buys land or ties up land. Step 2, they launch a project. They sell units early to hit a sales threshold. Step 3, once they hit that threshold, lenders say, okay, we'll finance the construction. Step 4, they build the building. The value goes up during construction. And step 5, buyers complete. The project closes and everyone's happy. That's the clean version. The real version was more aggressive, and the real version is this. Developers learned that investors were the easiest fuel. Investors buy faster, they buy smaller, and they buy because of a story, not because of livability. So the product shifted. Tiny one bedrooms, studios, and micro layouts. And developers optimized price per square foot because that's what sales centers sold. You do not sell the total price, you sell the monthly payment, you sell the future appreciation, and you sell the scarcity. Then you stack fear on top. If you don't buy today, you'll never get in. And what happened? The market trained an entire generation of buyers to believe a few things. 1, the best time to buy is always now. 2, pre-sales are always safer because you're buying new. 3, Vancouver always goes up. And 4, investors will always be there to buy later. And for a long time, those beliefs looked true. That is what makes the current crash so dangerous, because it's not just numbers changing, it is a belief system collapsing. Developers in Vancouver have basically admitted the same thing, just with nicer words. They built for investors. They designed for investors. They marketed to investors. And the city allowed a system where investor demand mattered more than user livability. Let's be blunt. A lot of the units built in the last decade were not meant to raise families. They're basically meant to be financial instruments with windows. And that works when investor confidence is high. But the second investors leave, the game changes, because end users don't buy the same way. End users ask different questions. Where do we put the stroller? Where does the kids sleep? Where does the table go? Can people work from home in this unit without losing their minds? An investor product almost always fails those tests. So when the investor crowd stepped back, the true demand got exposed. Not the demand that was hyped in the sales centers, the real demand. And that demand is smaller than the supply that was built. And that is the core problem. The supply was designed for investors and demand shifted towards end users, which was a complete mismatch. And that mismatch is the crack that became a collapse. Here's the part that makes things worse. Developers cannot simply pause. People online say things like, good, stop building then. And That is not how development companies work. Development is a machine with tons of overhead, payroll, engineers, project managers, in-house sales and marketing, legal, financing, land carrying costs, interest costs, and commitments to contractors. So if you stop building, you don't just pause profits, you still bleed. And if you bleed long enough, the lenders take control. A lot of developers are leveraged. They own land that is financed. They have projects in the pipeline, and they have loans that require progress. If they stop, they do not survive. So the developer problem is not, should we build? The developer problem is, what can we build that actually works now? And that is where the big shift comes in, because the thing that used to work, selling condo pre-sales fast to investors, is not working. So the entire industry is pivoting, not because they want to, but because they have to. That is the part that most people miss. The pre-sale crash is not just destroying buyers, it is forcing developers to change their entire business model. That changes what gets built in Vancouver for the next decade. The biggest pivot right now is purpose-built rentals. You've probably heard that. Developers converting condo projects into rentals, or launching rentals instead of condos. On the surface, it sounds like a small adjustment. Instead of selling units, they rent them. But this is not a small adjustment. This is a completely different money game. Condos were a shorter cycle. Buy the land, you sell the units, you build, and you cash out. Rentals are a long cycle. You build, you operate, refinance, and you hold for decades. So instead of getting paid by selling units, you get paid by the cash flow. That means developers have to become landlords. And being a landlord at scale is not the same skill as being a condo developer. Different risk, different financing, and different returns. Why are rentals popular? Because government programs and incentives make rental projects easier to finance. Because for many developers, they already own the land and have to do something with it. Because the condo exit is not reliable right now, so rentals become the fallback plan. But here's the brutal truth. Rental is the lesser of two evils, not the new gold rush. Why? Because everyone pivoted to rentals at the same time, which means rental supply is about to hit the market in huge numbers, and rents are not rising the way they were. In many places, rents have flattened or even dropped year over year. So now you have a situation where developers are piling into rentals just as rent growth cools. That squeezes returns. Lower returns make financing much harder, which creates a second problem. Even the rental pivot has limits. That is why developers are not only doing rentals, they are diversifying into whatever they can that still pencils. Another pivot that is happening is hotel conversions. Office space has been hit hard. Work from home changed demand. Not completely gone, but the old office market is much weaker. At the same time, Vancouver has strong tourism, strong travel demand, and a real shortage of a hotel inventory in key areas. So larger developers with capital are buying commercial buildings and converting them into hotels. But again, this is not fast cash. Hotels require operations. You either run it yourself or you partner with hotel operators. That means long-term revenue splits, another long game. Student housing is another angle. Yes, international student numbers have changed. That is real, but even with shifts, there is still demand for student housing, especially near campuses. Off-campus student housing has become a niche, not because it is fun, but because it is predictable. And then you have commercial projects. Some big developers are leaning into mixed use, retail plus residential, office plus hotel, and commercial plus rental. The point is simple. The industry is trying to find any stable revenue line, because the old revenue line, quick condo sellouts, is completely broken. Now here's the shift that matters most to regular people. Developers are starting to focus more on end user housing, bigger units, more livable layouts, townhomes, duplexes, triplexes, fourplexes. Why? Because end users still exist. Families still need space. People still want stability. And if investor buyers are not absorbing micro units, the product has to change. Zoning changes in Vancouver and Burnaby made multiplex housing much more possible. So what you're seeing is something that would have sounded crazy a few years ago, and that's large developers are building things that smaller builders used to do. Small multifamily, low rise, more livable units. And that's not because developers suddenly became saints, it's because the market forced their hand. But there is a side effect here. When big developers move onto low rise space, it squeezes smaller builders. That means more consolidation, more layoffs, more pain for trades. And yes, that is coming. This crash is not just a buyer story, it is a labor story. When projects get canceled, people lose work. Tradespeople, site crews, suppliers, subcontractors. In Toronto, the job loss estimates being discussed are huge. Vancouver will not be identical, but the direction is the same. And developers are already talking about becoming leaner, cutting staff, selling assets, streamlining. In the boom, they did not have to be efficient. Money was too easy. Now efficiency is survival. So if you never buy a condo, this matters because this impacts employment, migration, rents, supply, and the broader economy. Now we get to the part that most people cannot mentally process. Today there is too much inventory, but future supply is being quietly erased. Here is why. Buildings that complete in 2028, 2029, and 2030 need to be launched, financed, and sold well before completion. They need pre-sales, but pre-sales are not moving. Projects are getting canceled. So what does that mean? It means the pipeline for future for sale condos is shrinking. Now people hear that and think good, but if demand comes back even moderately, the future supply will be limited. That creates scarcity again. So what you might end up with is a weird cycle. Short-term oversupply, then future undersupply. And the industry will try to adjust by converting rentals back into strata in later years once it makes sense. You may see buildings that were held as rentals becoming for sale again later. That is a real possibility. The point is not to predict exact years. The point is to understand the mechanism. When you cancel projects today, you reduce supply later. Supply later affects prices later. And that is why this is a structural shift, not just a simple downturn. Here's what I think changes permanently. 1, you do not see projects sell out in a weekend the same way. That was a mania feature, not a healthy market feature. 2, you see a slower marketing curve. Projects launch, they sell steadily, they prove demand. 3, the best projects get built. The ones that are not actually desirable do not. That sounds obvious, but it was not the reality for a decade. Because when investors are dominant, demand is not about living, it's about yield, hype, and scarcity. End user demand is more honest. End users vote with their lifestyle. So the market will slowly shift towards units that make sense. More livable layouts, better function, more real demand, and this is not just a correction, it is a pre-sale industry being forced to mature. Now, let's get real. Who loses in this transition? Anyone who bought investor product at investor pricing, expecting investor exits. Anyone who needs the market to go back to 2021 behavior. Anyone who cannot hold long enough to let the cycle work. Anyone who bought the tiny units thinking someone will always buy it from me later. That is the assumption that got exposed. Who wins? Patient end users who can negotiate, buyers who have strong finances and long timelines, and people who focus on livability and fundamentals, not hype. And yes, some of the investors are going to win too, only the disciplined ones. The ones who buy at realistic prices and can hold, not the ones who need appreciation just to survive. The market is punishing the people who confuse optimism with strategy. If you're buying in this new world, here are the rules. Rule 1, stop thinking 5 years. If you want to buy new construction or a condo in a volatile phase, you need a long horizon. 10 years is a safer mindset. Rule 2, do not buy on story, buy on math. What can you rent it for realistically? What is the long-term livability? What is the supply wave in that specific neighborhood? Rule 3, assume you might not get a clean exit quickly. If you need a fast resale, you are gambling. Rule 4, use inventory to your advantage. If there are any similar units, you have leverage. If one seller refuses, another will negotiate. This is a buyer power environment in segments, and buyer power in Vancouver is rare, so use it properly. Here's the truth most people hate. The old pre-sale system was not healthy. It was a speculative machine. It rewarded speed over quality, it rewarded hype over livability, and it rewarded investors more than locals trying to build a life. So yes, this crash is painful, but it is also an industry reset that needed to happen because a housing system built around investor mania is not stable, and it always ends the same way. The music stops. Someone is left holding inventory, and the people who believed it could not happen are the ones who get hit the hardest. So that is what is happening. The system broke. Developers are pivoting. The next decade of new construction in Vancouver is gonna look very different. Fewer weekend sellouts, more rentals, more end user product, more discipline, and in the middle, a lot of pain. If you want more breakdowns like this, subscribe. And if you want help navigating this market, whether you're buying, selling, or trying to make sense of pre-sales, my contact info is below. Thanks for watching, and I'll see you in the next one.